Good morning, everybody. I'd like to call the Finance Committee meeting to order, please. And Dave, are there any public speakers? Doug, are there any public speakers this morning?
No, sir. There are no public speakers this morning.
Okay. Then the next order of business is the approval of the Finance Committee minutes of February 22nd of 2010. Motion, please. Second, please. All in favor? Okay. Minutes are approved. Dave, would you comment on the work plan? Or Doug, you're going to do it?
Yes, Mr. Chairman, there is one change to the work plan. The information technology report has been dropped from the work plan for this month. Projects in the work plan are being reviewed, and a report on these items will be given later in the year.
Okay. The next item on the agenda then, Doug, is Budget Watch.
Okay. We'll talk about primarily February results. We'll start with passenger and toll revenues for the month, which were impacted by two major snowstorms. As a result, passenger revenues were $8 million or 2.5% unfavorable. Toll revenues were impacted even harder, $8.5 million lower than budget or 9%. This contrasts with January, where results are actually slightly favorable. So on a year-to-date basis, passenger revenues are down 1.1% and toll revenue is down 3.4%. Again, weather is primarily the reason for all of that. Moving towards operating expenses, again, we're seeing favorable results in February. They were lower than the adopted budget by $34 million or 5.6% for the month. Year-to-date expenses were $55 million or 4.4% favorable. And these results only are the results from transit and the two commuter railroads. So if we were to add in the other agencies, those results might even be a little bit more favorable.
Yeah, I think this is worthy of a comment here. This $55 million is a lot of money. I mean, that's almost, 25 plus million a month. I think this just is the tip of the iceberg, and this is happening because of the chairman's plan here to cut the expenditures, to run the MTA more efficiently. I think you're beginning to see fruits coming from this effort, and I think you'll see more of it in the future. We're very serious here about getting every nickel we can's worth of the riders' money to make sure it's run efficiently, and I think this is what you're seeing, and this is really big money above the budgeted cuts that we're talking about. So this can really add up to significant savings for us. I think I'm not making any predictions for the future, but this is significant, and you will see this happening in many areas around the MTA as we go forward with our plans.
Yeah, I think you're definitely right. There's a lot of programmatic savings. A lot of decisions were made not to spend on things that in the past might have been spent. Early in the year, you do tend to see some timing savings, so we have to be a little bit cautious about any predictions that we make. But agencies, they are in fact making every effort to reduce non-essential spending. So we'll see how that goes going forward. In the same vein, debt service costs were $19 million or 12% favorable for the month, actually on a year-to-date basis, and a lot of that could be timing, but there's also lower rates. We had a little bit of bad news with the real estate taxes. In January and February, they had been tracking just slightly under budget, but for the month of March, they were $13 million or 33% lower than projected, which brought the year-to-date total to $18.5 million or 16%. And the shortfall was both in the MRT and the urban tax collections. Urban tax collections especially were short for the month, and due to lower real property tax collections in New York City. When you look at real estate taxes in general, the way we constructed the budget, we were showing an improvement in the first 6 months of 2010, a gradual improvement every month, and then it would flatten out. But what's really happened is that we've been tracking very close to 2009. So while we haven't gotten any worse, we haven't seen yet the improvement that we had anticipated in the budget, and that's why you're seeing the negative variances. We hope that once the improvement does start, then you'll start to see a much better trend going forward.
And you can forecast the whole month of March?
Yeah, what it is, we know in advance what's going to come, so that's what we're reporting is the cash, and that's the cash we know that we're going to get.
But I still do think, I mean, that as the banks and other lenders start to remove some of these illiquid and distressed assets from their books, I think you're going to see this thing pick up. Don't forget there's a lag time, too, because when you go to contract till you get a real estate closing takes more time. But from friends of mine in the industry, I think, well, it hasn't been a deluge. I think you're starting to see some of these properties sell. And I do think that this is the one area where we may hopefully have bottomed out and start to see an increase in tax revenue from this.
Well, yeah,
But
it certainly hasn't gotten any worse than '09. It's, like I said, we're pretty much at those levels again. Unfortunately, we had expected to see improvement sooner. So we think it's going to come, but it seems right now there's a little bit of a delay in that. I'm going to now talk about the payroll mobility tax, which was, we received $124 million, which was $7.2 million or 5.5% below the adopted budget. Year-to-date, these receipts are about $72 million below the adopted budget, and that's through 3 months. Those results are not inconsistent with those reduced forecasts that we received from the state, just a little while back. We're obviously tracking those results every single day.
So have they yet come up with an answer as to why it's lower than they anticipated?
It's A, they don't know some of it, but B, it's a combination of a weakening in the actual receipts. They think that some of it we might see in April and May when the proprietorship businesses file their taxes and sort of true up with what they should have been paying all along. And like I was saying, economically we're just at a lower base than we were. There's about 17,000 fewer businesses in 2009 than 2008 from just the data that they received, where they've been doing some research to try to find what's going on. So it's a little bit of this, a little bit of that. And we expect to see a lot of money coming in April and May, and it's budgeted as such. So I think come May, we'll have a pretty good handle, or at least a better handle on where this tax is coming in and how we stand. Because what we did is we budgeted based upon cycles of withholdings, that based on historical withholdings of income taxes in the state. So you can see certain months, primarily April and May, are higher than other months because that's when people true up on their income taxes.
I understand that we probably budgeted based on when you expected the cash to come through on payments.
Yeah, well, we do that. There's a little bit of a lag.
How is that different than what the state told you? Is it different than what the state told us, or are we listening to what the state said?
We basically took what the state did, and then we adjusted it with the reality of when those expected receipts would come in and when they, in fact, would come to us. So we sort of put in a little bit of a lag time.
So a few months ago, or whenever it was, State Division of Budget said that for 2010 to expect between real estate transaction and these taxes a drop of possibly another $400 million.
Well, it was like 360 just on that. Yeah.
So has that changed?
It hasn't changed. I mean, theoretically, we're running a little bit better than that. But what we're running against are budgets that we've sort of calendarized budgets.
Where does it say that we're running better than that?
Well, we're not. We're running worse versus the budget. Okay. Right. If you were to compare against what
better than the 360?
Yeah, but the problem is with the 360 is hard to tell because we don't know when in what month.
So in your assumption, has anything changed?
We don't think anything has changed at this point. It's possible it could get a little bit better, but we really have not enough data to make that decision.
And are you confident?
Take 80 and multiply it by 4, it's 320.
Are you comfortable in State Tax and Finance and Division of Budget's explanation as to why the money's not coming in? It sounds very like we're not sure yet.
Well, we're trying to get better, more finite answers.
So you're not comfortable yet with an answer?
Yeah, look, we're working our way through this problem. We reached out to Tax and Finance. Tax and Finance told us about the drop in businesses in the 12 county area since 2008 versus 2009. And no, I mean we don't have a reconciling variance, which is I think if that's your question, I don't have that. I would love to have that. Part of the problem is the way the tax money is coming in and being paid, and the way it was retroactive last year, and when it was paid in October, November. it's really hard to look at and figure out trends. And so at this point in time, as Doug's saying, we're kind of trending to their latest forecast, even though March came in a little bit better than we would have expected based on that latest forecast. But I don't see that silver lining yet in the cloud, if that's what we're hoping for.
Right.
We're still going to be, as Commissioner Saul just said, even if you just straight line what we have, we're probably at least $320 million below. And that's not far off the 360 that we started with. So we have a couple of big months coming up in April and May, as Doug said, expecting a lot of money. If that doesn't materialize, then we're back on track maybe with the original $360 million forecast.
On top of the other 350 or 400 in last calendar year that was shortfall as a result of the PMT, right?
Well, that was a 170. That was a 170.
It was only
shift.
170?
Yeah.
You know, I've been giving some thought to this whole process of the state giving us an idea of what this is going to be. You know, if you really go through if you really go through the thought process, the only areas that we're guessing at were the proprietorships and the partnerships. All the other revenue comes from salaries.
Yes, that's right.
And I mean, certainly the government knows the Medicare wages that have been paid into 12 counties. And that is the same salary number that will be subject to this mobility tax.
They reached out to what they call I believe the rapid payers and prompt payers. I'm sorry, and they don't see a problem with those collections.
But my point is that there's a record of the Medicare wages paid in those 12 counties.
That's right.
That number should have been the number that they used, even going back to March, when this thing was supposed to start. That would have given them, in hindsight, what had already been paid for 9 months in 2009. So going forward, they could have been pretty accurate here. I can't imagine that proprietorship and partnership is going to make a difference of $360 million. That to me is phenomenal.
Right. Well, that's over 2 years, and I know what you're saying. You know, they're saying that there's not an issue with those large payers. That they're saying that there might be some companies where there's certain people that they're saying don't fall within the category of the people that need to be paying this tax because they work out of the geographic region and things of that nature. But this is what they're looking into. But they don't think a lot of that shortfall is in those areas.
Yeah, but you know what, though? It doesn't even matter, Jim. We have to rely on what the numbers that the state gives us. We have to plan our business based on what the state gives us. What Doug is saying, if you just look at what's come in, it shows around 320, but we really don't know. And I think that for us, at this moment, and I think maybe in the next month or two, it's going to define itself, we need to use their estimates here to plan our business.
Oh, there's no doubt we have to use their estimates. My concern is, I'd be very concerned about using their estimates going forward on anything. You know, if they give us this kind of estimate now and we're off $360 million, I mean, how can we be assured that the next estimate they give us is going to be better?
Well, but you're going to have a run rate. That's the one. You'll have a run rate, a monthly run rate.
I mean, you will have some level of experience. And the fact of the matter is, the level of experience you've got is still not going to be very good because it was implemented in the middle of the year, and it's not clear that it was done cleanly. And although logically you would think that this should follow the Medicare tax base, I'm not sure that the state has clean numbers county by county on the Medicare tax collection. That's federal, it's not state. And it sounds very logical that you'd have that kind of clean, up-to-date information. I'm not sure they do.
The federal government does.
By county?
They have it by zip code.
Well, what they have and what others have is not always the same thing. And what
Shared
others have
service.
access to, put it that way.
Go ahead.
Yeah, that's pretty much, in the case of the other MTA aid, which were those other taxes that were approved, we had actually very favorable March results, but what happened there is we have these quarterly payments, and there were timing assumptions, so we thought monies were going to come in February when they in fact came in March. So if you look at it on a year-to-date basis, just a little bit unfavorable, and we think based on discussions with the state, those monies continue to trickle in. So we don't see that right now as much of an issue.
And do you have a sense of how much of it, because we know we're paying the taxi receipts.
Exactly.
Do you have a sense of how much in each category make up this 27 million? Whether the majority of it is license and registration?
But I can get that for
I
you.
think that's a good question. I'd
Yeah.
be surprised at this point whether they got even close to the taxi receipts.
Okay.
I'm wondering
They
about
did
that
not-
myself.
I know that in the governor's budget they changed the way they do the collections because they didn't actually write it correctly after we told them a number of times to do that.
Yeah.
And I'm still not sure they got it 100% right. There's ways to get that information, but there's no way that number's in here at this point.
Yeah, we'll get that information
Thank you.
for you. Okay. That concludes Budget Watch. If you have any other questions.
The only thing I think you take out of this thing is, if you look, other than the payroll tax, if you look at the real estate taxes, the drop-off in real estate taxes, the drop-off in our fare box revenue, it's more than offset by the savings that we've got, expense savings, and actually it's about $20 million to the good for the quarter. So while we are dropping in revenues coming in, we're more than offsetting it in our savings. Is that correct, Doug, what I said?
Yes. That's where we stand right now.
Through February.
Yeah, through February. Yep. With no other questions, our next item is Finance Watch. Pat McCoy will take us through that.
Finance Watch was handed out this morning. It's a one-page handout, and we have a transaction to report on. I would just note that prior to this transaction, we spent a busy week, the first week of March, meeting with all three rating agencies, updating them on this DTF transaction as well as the upcoming revenue anticipation note transaction. And I would say that those meetings went well, and first and foremost, the ratings on the dedicated tax fund credit were affirmed with no change. And we were able to get into a very favorable market with this $500 million transaction. It was broken into two components, about a $60 million tax-exempt component and $443 million of Build America bonds. As you can see on your handout there, the combined statistics reflect an all-in true interest cost of 3.91%. Which is a very attractive rate relative to our budgeted rate of 5.07% that was built into the adopted budget and financial plan. J.P. Morgan served as senior manager on the transaction, and Ramirez and Company was co-senior, and of course the rest of our syndicate was involved as well. To give you a sense of pricing on the 30-year term bond for the Build America bonds, that bond was initially priced with price talk of approximately 160 basis points plus or minus 10, and we were able to tighten that pricing due to a very strong investor book to a final pricing of 150 basis points spread to the 30-year Treasury. The other statistics are here for your takeaway. I'd be happy to take any questions about this transaction, if there are any.
Just to note, and thanks for breaking it out, Pat, that $4.1 million went north to the state of New York out of these bond proceeds. It's a lot of bus routes.
That's correct. The state bond issuance charge was collected on this transaction, $4.1 million. The remaining costs of issuance include fees to the rating agencies for their fees, bond counsel, financial advisor, and so forth.
I don't want to beat up on the rating agencies, but I know that I had a client recently who was just charged $160,000 for a rating 6 months after they had last gotten a rating. Mm-hmm. Are our rating fees, do we try to work with the rating agencies on what they're charging us?
Well, we do. We do try to work with them.
Or do we get a discount for being such a frequent issuer?
We do.
Great.
Yes.
Okay.
The next transaction to report on is the issuance this week of $475 million of revenue anticipation notes. All board members were emailed that preliminary official statement. We're expecting to price this tomorrow. Again, the proceeds of this will be used for operations of the transit and commuter systems, and the notes are first and foremost secured by the regional mobility tax, as well as the aid trust account receipts, which includes the taxi cab surcharge and those other taxes and fees that Doug was just going through. We expect that those pledged revenues will cover the full principal and interest on the RAN before its maturity date of December 31st, 2010. However, to the extent that those revenues are deficient for any reason, we've pledged the MMTOA taxes to the notes such that after October 1st, if we haven't met 50% of the full payment fund requirements, then we would start grabbing the MMTOA taxes. Lastly, if on December 7th the whole payment fund isn't funded, then we would be able to trap fare box revenues of the transit and commuter systems. Again, this is just to ensure that we've got sort of a belt and suspenders approach to the credit. I would note that we did receive the highest ratings, short-term ratings from all three agencies, so the MIG-1, F1+, SP1+. We would expect pricing on this note to be approximately 0.5%. I touched base with our lead manager this morning, which is Citi, and they indicated that they're working with their accounts, investor accounts, to approve the credit and to get them comfortable. Again, this is largely the same credit that we issued a RAN on last year. Sorry.
Does the intercept of the pledged taxes basically occur as we issue these notes? When do we start collecting the business tax proceeds and the rest of that package?
For the payment fund, we start on July 1st.
July 1st?
July 1st. And this is a little later. This is earlier than we started last year. Of course, last year we didn't expect the revenues to come in until November, so we're giving ourselves more time with this RAN. And of course, it's a smaller par amount. Last year we issued $700 million. We think the 475 is going to be the right amount. And at this point, I would say there are no other plans to issue the additional $225 million to get us to the $700 million that the board approved. That refinement of our cash flow occurred after the board meeting, and that's why we're sizing it the way we are.
Thank you.
Is the belt and suspenders that was used here reflective of the rating agency's concerns about the budgeted levels of those mobility tax receipts?
I would say no. If you look at the way we structured the RAN last year, it's a very similar. The one difference being that we had the aid trust account taxes as the second backstop. Here, they're being used as as a primary pledge with the payroll mobility tax. That wasn't a result of a concern at the rating agencies. It was really our desire to meet the payment fund requirements with that first pledge of revenues, given the poor returns that we've seen from the payroll mobility tax, those reforecasts that we've been talking about from the state. We brought in the aid trust account receipts just to buttress that first revenue pledge.
So we offered it up.
Yes.
Anything else?
Okay. That's all I have to report.
Any more questions for Pat before we move on? Okay, Dave, why don't you go ahead and talk about some of the resolutions, action items that
Sure.
we have as far as scheduling changes and so forth.
Okay, well, not on your agenda, but the next item up are the resolutions for service changes, which I think everybody has received. It's either in this bound book with a separate attachment that has the environmental assessment, or you might have a book like this, depending upon when you received it. I guess just to sort of quickly summarize, based on comments received through the public hearing process, which took place on March 1st to March 8th, the service change proposals that were developed in January were modified. This package that you have before you carries those modifications. They're there for your adoption. The specific service changes and restorations will be discussed for information during the operating committee meetings that are being held today. Again, there are 2 staff summaries and resolutions before you, each requiring a separate vote. The first resolution contains the results of the environmental assessment. The environmental assessment resolution finds and determines that the service changes will not result in any significant environmental impacts, are exempt from the State Environmental Quality Review Act, and that a negative declaration with respect to the service changes can be adopted. We need a vote on that resolution.
Okay, we have a motion, please. And a second, please. All in favor? So passed.
Thank you. The second resolution requests approval to authorize agencies to implement major service changes that were subject to public hearing and the modification of the Cross Bay Bridge resident rebate program. The discussion of these specific service changes, again, are being taken up at today's operating committee meetings. Based upon public comments, certain restorations and modifications were made to the January package, and those changes are identified in Attachment 1 or Tab 1 of your document. Attachment 2 contains the agency's updated service change reports reflecting the changes described in Attachment 1. Attachment 3, or Tab 3, lists those major service changes which require your vote. Attachment 4 describes the modified Cross Bay resident rebate program. The service changes and the modified Cross Bay resident rebate program produce total annual savings of $93 million. As a result of the restorations and modifications, the savings are $8 million less than what was budgeted, and therefore additional savings will be required from the operating agencies this year. This requires a vote.
Okay, may we, a motion, please? Okay, and a second, please?
Second.
Okay.
I spoke up in transit, and will speak up Wednesday, but some of these service reductions don't make any sense and are strictly being done for dollar value. And I'll give you an example. We have just spent close to $90 million to renovate the Atlantic Viaduct in Brooklyn, and now we are proposing to not run any trains on it for all the overnight hours. What if one of Ratner's stadium games goes overtime? What if there's an entertainment event there? We're going to force people to get on the subway, go to Penn Station to go back to Long Island? This is an example of some of these things that look great on paper, but are just going to be so harmful to our customers. And, I don't want to take up too much time today, but this is just one of those examples, Dave. It's really depressing. And it's really depressing. I'm the only one saying these things. That's even more depressing. I know that we have to reach a dollar figure, and I know we're doing everything we can, and I don't blame anybody around this table, but I certainly blame the state for this failure, because this is a major failure. It's a failure to our customers, which is, by the way, the largest ridership in North America. It's unbelievable we're going through this.
Any other comments?
Well, just to correct Andrew, he's not the only one saying this. I stated in January, and I think I've been consistent throughout, that service cuts, in my opinion, need to be the last option taken by this board. We're a transportation agency. I certainly understand the position of those who are going to support it, and I will tell you that it's a close call in my judgment. And I don't think that we've been given a lot of choice, and as Andrew has said, largely because of the actions of the state legislature. I spent a lot of time up in Albany in the last couple of weeks as I was reconfirmed to this board, so I'm going to be, God willing, around for another 5+ years. But it did astound me at the lack of understanding of the problem that was created. The hearing process infuriated me. sitting and listening to legislators attack us for what was in essence the equivalent of writing us a bad check to the tune of $500+ million with the shortfalls that came in on the mobility tax, and then to have the gall to essentially steal another $150 million from us in December to reduce the deficit, and then to cut the school MetroCard funding by another $39 million, essentially creating 90% of the problem that we have to deal with today. And for those who know better to come to our public hearings and attack the people in this room for being heartless, to me, is the ultimate of hypocrisy, and just really galls me. And I certainly do not fault anybody in this room for disagreeing with me where I vote. When I vote on these issues, I applaud our new chairman for the work that he's taken, and perhaps I have more confidence in him than he does in his own efforts to find savings that will accrue through going after parts of this agency that really need to be shook from top to bottom. And I think that the staff has done a terrific job in identifying some areas of things to be put back in, but at the end of the day, I believe that we are in a crisis of national proportion. The Congress of the United States has authorized us to be able to use some stimulus money to buy us through that time. I think more consideration could have been made towards using some of that money or the pay-as-you-go capital, both very prudent plans in good times and plans that I hope that we're able to, in fact, increase as the times get better, and hopefully that day will be coming. But I will be voting no because of my commitment to and perhaps my lifelong dependence upon bus service and some of the rail service that's being cut, which will never come back after we take this action. Thank you.
I'll try to be brief. Actually, Commissioner Capelli gave a great explanation of history on this, and I mentioned a little bit earlier in Transit Committee, is that for the last actually 3 years, from 2 years worth of congestion pricing, 1 year's worth of the Ravage Commission, and moving forward, Albany has been provided with a problem, the problem that the MTA has within its budget, both short-term and long-term. We all went up there, we all sort of explained the issues over and over again, and clearly they had their own decisions, and they made their own decisions, which is in their purview of what they should provide the MTA. And when the money does not come in, or the proposed solution does not actually work, and then they continue to cut the MTA, it basically sends the message that we do need to fend for ourselves. And if that's the case, there's only two things that we can do: raise revenue and cut expenses. Those are the only two things, right? It's simple. Cutting expenses, the chairman has outlined as much as he possibly can with very aggressive marks of how much he wants to save by turning this place upside down. Whether it's through renegotiating specific supplier contracts and a whole bunch of things that I won't pretend to explain for the moment. But shaking the MTA upside down, getting as far as you can, is only going to go so far. Just to add one bit of history, the service cuts we're talking about now are to close the $400 million problem we had at the end of 2009 that was rolled into 2010. We just talked about in this committee how there's another possibly $320 to $400 million problem coming before the end of this year. That, again, for the moment, we don't have any proposed solutions for that. And we forget that there's a big problem moving forward. And there still is a problem today. There'll be a problem tomorrow. Until we make some major changes, I'm not sure what's going to change that. So obviously no one wants to do the service cuts, but I think it takes a little bit of everything. You only have a certain amount of money to deal with, and that's been made apparently abundantly clear by Albany, that we need to deal with what we've got. It's unfortunate, but I think that's the state that we're in.
I I'd just like to say that nobody wants to do some of the things that this board's forced to do, but I want to assure the public that it's not just the public here that's going to take the hit. As everybody said, that the chairman, I've been here for a long time, as you all know, and I think that this chairman is really not just talking about shaking this place upside down. I think he's really doing it, and I think you will see tremendous savings coming out of this place. So this is not just a sacrifice by the riders. There's going to be a tremendous amount of sacrifice happening here at the MTA, and I want to assure everybody that in my discussions with the chairman and in being involved in some of these operating committees, this is happening as we speak, and I think you'll see this happen, and I think the public deserves to get their dollars worth, and I think with this chairman you're going to get it, and with this board. We are dedicated to do this. Is there any other comments before we take a vote?
Just one quick one, and I think all of us that are on this committee are on this committee because of financial acumen, and anyone that understands finances cannot help but be terrified about what lay ahead of us. If I felt confident that we had stimulus 2 in the bag, if I felt confident that the level of economic deterioration was going to somehow stabilize and not get much worse, this would be a much easier vote for me. As it is, I am torn in pieces about this. I never imagined that coming on this board I would be participating in the degradation of service to our strap holders. It's an anathema to all of us. I think that we need to very, very carefully walk through where we are, because sometimes I feel like I'm watching a 3-card Monte game in that I don't know what sort of savings have been accrued or we expect to be accrued, and I understand that the projection of savings from all of the fantastic and necessary things that the chairman is doing are going to be easy to peg at this point. But I do know that in laying off station agents rather than attriting them, it means that the arbitration award is going to be somewhat less injurious than we had expected. I'd like to understand those numbers before we go into the Wednesday vote. I believe that there is not a single person on this board that wants to see these service cuts happen. I'm very happy that we were able to buy back some of them. I would love to think that we could buy back more, which is why when I see $4 million sent to Albany in bond fees, it makes me want to scream, because I don't know where that money is going. But like all of us, I think I heard what Dick Ravitch had to say in the press last week, and it gives me no comfort that the additional painful solutions are going to be needed to be taken in Albany before the end of the year, and how that will impact us is anyone's guess.
All in favor? Aye. And those opposed? Okay, you got a record of that, right, Doug? Okay, the motion passed. The action item passes. Next on your calendar, Dave.
Next, we move to headquarter reports and information items. The first report is an information item, the 2009 annual prompt payment report. And Mike Jaskar, our controller, is here to talk about that.
Yeah, just a few comments on it. Prompt payment is a statutory requirement of the Public Authorities Law. This year's rate is 8%. That's set by the New York State Commission of Taxation and Finance. Essentially, for the period, prompt payment was paid at $41,000 over the course of a total invoice payment of $9,103,000. Essentially, that's about 5/1 of 1%. Upon the okay of this report, we'll send it to the New York State Controller's Office, the New York State Department of Budget, the Assembly House and Ways Committee, and also the Chairman of the Senate. If there's any questions, I'd be happy to answer it.
Okay. Next, we're going to move to action items. And the next item is 2010 Board Committee Charter Adoption Amendment. Commissioner Saul will talk about that.
Right. I don't know that, I think everybody's aware you got the memo, excuse me, from the chairman dated March 9th, which affects the committee structure here at the MTA for April. And I just wanted to review this for a second with everybody to make sure everybody's aware. The Long Island Railroad and the Metro North Railroad committees are going to meet jointly starting with the April board cycle. The whole idea of this thing is obvious. It's to be able to coordinate operations, to do more things together in order to affect savings that we've been talking about here. For example, in the purchase, what comes to mind very easily is purchasing. So you have more joint procurements. There'll be one committee oversighting so that what's happening at Metro North, if it's good, can affect what's happening at Long Island Railroad and vice versa. All bus operations are going to be centered under a bus committee, which I think has very important implications for the way we do business, again, so that we can get the biggest bang we can for the rider's buck. The Capital Construction and Real Estate Committee will be disbanded. And here, all capital construction projects will be overseen by the respective committee. For example, capital construction on the railroads will be overseen by the railroad, the Long Island Railroad and Metro North Committee. The real estate function, which was part of the capital construction committee meeting, will now be handled by the Finance Committee. So all real estate matters from now on, starting in April, will be handled by this committee. And so what we're trying to do here basically is to streamline the way we operate, to be able to get the biggest bang for our buck, to be sure that each committee that is in the same business understands what the other agency is doing. I think it's very common sense what's happening. I think it's a great idea. So in April we will have less committee meetings and hopefully we'll have a much better oversight of the way we operate here at the MTA. I think that the senior staff and also the board members will there'll be much better communication here at the agency. I think this is a terrific idea. But we need to amend our charter to affect this change. And I would like to read this charter amendment, please, and ask for your approval. Today we are being asked to approve amendments to our committee charter to reflect the changes in the committee structure which will take effect in April. These charter amendments allow our committee to pick up our piece of the oversight formerly exercised by the Capital Construction, Planning, and Real Estate Committee. This means that the Finance Committee will now have oversight over real estate matters, and the operating entity committees will now have oversight over the capital projects handled by the MTA Capital Construction Company for that operating entity. And I would like to have a motion, please.
Motion made.
And a second, please.
Second.
Is there any discussion?
Yes, I mentioned this in transit on the bus committee in the staff report, which appears on pages 31 and 32. On page 32, there's a sentence that seems to imply that providing oversight responsibilities to the new bus operation committee will provide more focused and efficient oversight, and I guess I took umbrage at that. I think the reasons for creating a separate bus committee are absolutely appropriate, and I'm glad that we're doing it. But I would like the language to be changed as follows. Providing oversight responsibilities to a new bus operations committee consolidates in one place and streamlines overview of the various bus operations conducted at the MTA. The Transit Committee approved in principle this change.
We'll have a vote on the amendment, and then we'll have a vote on the main action item. Okay, so first, we have the amendment. May we please have all in favor? Aye. And opposed? Amendment carries. Now on the main action item, please. All in favor?
Aye.
And those opposed? Unanimous. Both are unanimous. Let the record know. Okay.
Okay, the next item is the East Side Access Owner-Controlled Insurance Program, which you can find on page 53. We are seeking board approval for the extension of MTA's insurance coverage for the East Side Access project. We have representatives of risk management here to answer any questions.
I'm getting like you, Jim. We need a motion, please. And a second, please. All in favor? Those opposed? So done.
Okay, the last action item is the 2009 Annual Procurement Report. You can find on page 57. We're trying to obtain approval to file with the State of New York as required under Section 2879 of the State Public Authorities Law. And Clifford Shockley is here to answer any questions that you may have.
Okay, motion's made, and a second, please. All in favor? Those opposed? Motion carries.
Next item, we have one competitive procurement for headquarters with a total amount of $234,000.
A motion, please. A second. And a vote, please. So moved.
We're going to move to Metro North. We have an information item, which is the impacts of Metro North of New Jersey Transit's proposed fare increase, which you can find on page 63. This is an information item. We have representatives of Metro North here, should you have any questions.
Could I point something out? I just
Sure.
want to make it clear that this is not a fare increase that's within the authority of Metro North. This is totally New Jersey Transit, and that it does result in costing us money if
That's correct.
all their approvals go through.
That's correct. Okay. We have one procurement at Metro North for $11,111,684.
Motion, please. A second, please. All in favor? Go ahead, Doug.
Okay, Long Island Railroad, we have one non-competitive procurement for $35,200,000.
Motion, please. Motion, please. A second. All in favor?
Long Island Bus, we have no items. Bridges and Tunnels, we have no items. New York City Transit, we have 3 items. 3 procurements, 1 non-competitive, 2 competitive procurements for a grand total of $81,139,465.
Motion, please. And a second, please. All in favor?
Okay, MTA Bus, we have no items. Capital Construction, we have no items. First Mutual Transportation Assurance Company, we have no items. I believe that concludes our agenda today.
Okay. A motion to adjourn the Finance Committee meeting, please. A second, please. All in favor? Thank you, everybody.